I'd like to welcome to the stage Cameron Teitelman, founder and chairman of StartX, Nicolas Kokkalis, co-founder of StartX, Michael Feng, co-founder of CoinAlpha, Shane Walker, CEO of Me, and the moderator, Cameron Turner, founder of FounderBit.
All right, well, I'm going to stand up just because I can, and it's good to stretch the legs after all these great presentations. I want to start out just by thanking the organizers for the show. This is a really great set of speakers and lots of good information to share, and I want to thank you all for your undivided attention afforded by no internet in the room, which is really nice for the presenters. I don't know if it was the plan to have this conference in a cold storage facility, but it was a good idea. So there's the concept of information asymmetry, and right on the brochure for this show, there was that concept that we could get together, share some information. This group represents a global set of investors, founders, and people interested in cryptocurrency. So I'm going to share really quickly a few slides from a very recent study. This is very early, but it's very consistent. This is the sixth panel I've run this fall on ICOs, and a lot of the key points here resonate across all these different conversations. I'm going to whip through these really quick, and then we'll get to the intros. So the background, I think most people are familiar with the CB Insights number. So something happened special this summer, which is that ICOs surpassed traditional seed and angel stage fundraising. And at that point, there became a lot more interest in ICOs specifically in the context of blockchain than there was previously. And so we represent a group of Stanford founders who have been doing fundraising for several years, and we'll talk about that. But this became a front and center priority for us to get organized around this concept. So real quickly, this is a very low end. I think just the last bullet points need to keep in mind. It's just sort of some attitudinal type response. I think one of the key themes that I've heard that's sort of contrary to something that's commonly said in market is that most of the companies running ICOs are not brand new companies that are raising their very first money. They tend to be a couple years old. They have some experience. They've done previous raises, seed or angel rounds. It's not necessarily their only form of fundraising. So what you're looking at are a set of typically very experienced entrepreneurs who have a good sense of fundraising and their alternatives and have a good understanding of the investor market above and beyond the requirements for an ICO. There's a good spread in terms of the amount raised previously. And also people are looking at, go to this one, a large variance in the amount that they're actually raising. So most are targeting eight figures or greater. And geography and timing are generally still in flux. So I think that's really all I wanted to share. One other point is that we heard from the utility token panel this morning is that there's sort of this question of security versus utility. But in terms of going to accredited investors only, that's still the minority in terms of what we're seeing. Biggest concerns, I don't think this surprises anyone, tend to be legal and regulatory issues around ICOs. So those are just a few facts of what we're seeing in the Stanford community, just to set up the conversation a little bit. We started this concept traditionally. Companies are going out and doing fundraising with traditional VC. If you drive up Sand Hill Road, you sort of have venture capital off to the right and Stanford off to the left for 2 miles all the way out to 280. And we see ICO as an opportunity to open up those activities to traditional investors, to investors that are international for the most part, and some non-traditional investors in early stage funding. So with that, I'm going to turn it over to the panel, and I'll just let them introduce themselves, and maybe as you're introducing yourself, just talk a little bit about when and how you got interested in cryptocurrency, starting with Nicolas.
Well, hi there. My name is Nicolas Kokkalis. I was one of those people who lost money on empty GOX, which was the very first, one of the very first most popular crypto exchange in Japan. All three of us are here graduated from Stanford. I did my PhD at Stanford, and we have also been affiliated with each other and with Cameron as well, because we're all part of StartX, which is an accelerator and founder community that's affiliated with Stanford University.
Sure. I'm Shane Walker. I'm a repeat entrepreneur, but I was, again, part of the Stanford StartX program. Stanford StartX represents hundreds of Stanford companies that go through a well-vetted process of their peers, and most importantly, it comes with the investment of Leland Stanford Junior University every time we seek money. So it was a nonprofit at its core, but these guys actually helped form that 10% fund you guys see at YC, Stanford. These guys made that possible, and then it's just blown up. So I got in right before it got too big. Now it's really big. And of course, such a vibrant community every quarter is progressing. So the trends have now become, the community is so good and dense of really smart people that as soon as anybody had token success, George Lee from We Trust in particular, obviously the community disperses the knowledge very quickly. Me.me very quickly, we're the Giphy, Twitch, whatever you want to call it, of memes. We're backed by BetaWorks, Social Capital. Our token is very unique. We're basically decentralizing. Imagine if YouTube or Twitch were to decentralize, but for memes. Memes are actually growing faster and bigger. If you're looking to buy an interesting token, we should talk. But otherwise, I'm here to preach about Stanford StartX. It's really a unique way to look at really smart founders that are all doing tokens and learning from each other.
Hi. Not sure what else I can add there. So my name's Cameron. I founded StartX. Did a private equity company before that and an advertising company. I think we're seeing a slow crawl to a fast walk now for all the companies that we support at StartX around blockchain, which is really interesting to see. Is there's this aha moment when people realize, wow, the underlying technology here is so amazing, and how can I apply that to my company? And we have things like 600 companies now we've supported. They've raised around $3.5 billion. I think market cap's around 11 billion now. And a lot of them, a majority of them, are looking how to tokenize. And these aren't just, ideas on a napkin. These are companies that have, 20 plus million in revenue already. There are the ideas on a napkin, but there's kind of people all across the spectrum, and everything from biotech, deep biotechnology companies, to consumer internet. And we're excited about this because it's kind of been a grassroots effort with our community to get into this space. I mean, one of the founders that went through StartX 3 times with 3 companies, their 4th one was Protocol Labs, which created Filecoin, among many others that have been ICOing and doing some really interesting stuff in the crypto space. So we're excited to be part of the ecosystem and see what we can do.
Great. So maybe just to add some more color around some of the CB Insights number we were looking at, they reported not too long ago that we've seen over 3 billion raised, and more than half of that has come since after July. Since you guys have been around the startup scene for quite a while, looked at a lot of good and bad startups as well in terms of how to bring good startups into the community. What are the differentiators you're seeing right now in terms of ICOs, in terms of what makes a good ICO and something that investors can really put their weight in versus ones that we should wait and maybe ask more questions?
I'll go quickly. I mean, I think the investors that were up here previously did a really good job of the current state of the game. Protocols are a safe bet, meaning Filecoin was a good idea, well vetted. Decentralized platforms and protocols means the trust, meaning, hey, we'll invest in whatever Sequoia invests in. That's gone. I mean, there's teams dispersed all over the world, so you have to figure out who to trust and what to use as your trust factor. Filecoin, slam dunk, right? Backed by typical people, repeat entrepreneurs, protocol. Safe bet, in my opinion. I think on the app layer, you look at CryptoKitties, you look at gaming, stuff's about to start making a lot of money this year that's not a protocol. So investors are smart to say you should be more nuanced between the two. I think the recent uptick is, people were looking for a use case for cryptocurrency for a long time. Well, it turns out, as a funding for protocols and applications and companies is a really good use case for crypto. So all this fiat's coming in, and you see entrepreneurs, the best of breed ones, marry it to their long-term vision of building a forever company. I think that's what you see the best of. That's what I'd invest in, by the way.
Yeah, and if even though it looks like the source of money may be coming from a different decision-making process, so it sounds like in the past investors, VCs, a small amount of people was investing in those entrepreneurs. Now it sounds like it's a little different. We would say that, I would say that the decision-making criteria for deciding what is a good team to invest in are probably still the same. They should still be the same. So people should be investing in teams that are working on ideas that they are inherently motivated to work on those ideas. Because otherwise, every startup has ups and downs. So if you invest on a team that didn't really start working on this problem because they care about it, when the downtimes come, they may give up. So in this way, you will lose your money if you were the one investing on them. You need to look at teams that are able to execute on the vision that they have in mind, and things like that. So even though the environment seems to be different, in the end, humans are still the same humans, and we should be
Let me flip that question
best.
around also for Cameron. So instead of now from the investor standpoint, let's talk about it from the founder standpoint. So if I'm a founder and I'm marching towards an ICO and I'm facing a market that has sort of unparalleled liquidity for my investors, what should I look out for as a founder in terms of who's coming in to invest in my company, and how does that vary from what you've seen in working with investors over the years?
Yeah, you know, the interesting thing with the token stuff, you know, we hear this concept of smart investors. You want to get smart investors in your company. And I mean, I'm torn on this a little bit, because when you're selling equity, you're selling ownership in your company, and these people are with you for, you know, barring the secondary sales, 7+ years. And so they can have a material impact on your reputation in your company, and you have to spend a lot of effort updating them and, you know, all that kind of stuff. And so it's really important to vet those investors and trust them highly. I think with the ICO stuff, you know, the level of liquidity and the amount of investors actually may not matter as much, to be honest. You know, they'll be in and out, and I mean, unless you have some long vesting contract with them for their coins, you know, it doesn't really matter as much, and they don't have any, unless it's a security token, which is the same as just giving equity. If it's a utility token, then it doesn't, I mean, they don't have no ownership. So it's not, it's actually a much lower risk, which is kind of funny. That being said, I think it would be very faulty for entrepreneurs to not try to get those excellent group of advisors or investors still around the table and have them with you for a long period of time. So we see these like advisor rounds happening, or still normal financing rounds happening with people who can add strategic value on top of the tokenization. Yeah.
Yeah, how does the nature of ICOs, a lot of the, you know, affect that? A lot of the presentations this morning sort of spoke to the global phenomenon that is ICOs. So it's not just a Valley thing, it's not just a US markets thing, it's global. This is the East-West Blockchain Conference. How do you make decisions around globalization, and maybe this is to Shane, in terms of where do you set up shop as a founder when you're looking to ICO?
Oh man. Yeah, regulatory's been fun. So definitely hire lawyers. That'd be the first step. I would say, you know, definitely choose carefully. I would say most lawyers don't really have a lot of innovation. They're basically all trying to keep up in the market too. So what I do, you know, so what I did, I think we're an emerging new normal. So I think when you see tokens being released, you're going to see regularly that they're equity backed first. It's typical like signals of a good team, good equity investors, and they do a sale on like CoinList. You know, I'm thinking of Blockstack and some of the newer ones, and some of the standards are starting to emerge. So how do you marry the two? Well, I think you look at who's doing it best currently, and you say, all right, well, what did they do differently that I might want to do? And you look at Blockstack, they raised $5 million in equity from Union Square Ventures, fantastic firm, a handful of crypto funds. Then they did a public pre-sale, and then they went on CoinList and sold $50 million in token, and their equity investors now have a clear expectation of what they own and control. That's fantastic. So, you know, how do I view this stuff marrying? Well, you know, I was trying to figure out my own solution until you start seeing that all these other teams are now doing the same. So my advice, like, get a lawyer, look at the best of breed ones. CoinList is probably the biggest platform now. Whatever's up there, look at their contracts, all prepared by, you know, probably a handful of firms, and just try to keep up, because you don't need to reinvent the wheel. The wheel's being formed with every successive ICO. And I would say that's it. I think the biggest marrying is like now you can marry global tokenized investors and users of your, you know, of your company along with the accredited investors. And what I think we're going to see next is you're going to see massive Series Bs by people who do this correctly. Meaning, look at Blockstack. They're probably going to raise a friggin', I don't know, $100 million Series B when they decide to. I think that's the new normal whenever you talk about 2018.
All right, I'm going to ask one more question, then I want to turn it over to the audience since we have a great opportunity to ask this panel questions. What do you all see, or let me set this up a little bit, in terms of differentiating token investment versus traditional securities? There's an opportunity in having deployable and distributed code that can actually do things out on the network versus a traditional piece of paper. What are we going to see in the future in terms of smart contracts, in terms of functionality, that it actually does something besides just exist? Someone want to grab that?
Well, I can get an initial crack at this. Well, right now, there is one fundamental constraint around smart contracts, is that they can mostly get information that is already on the blockchain. So if someone has created an app and you send coins to that app, the app has an algorithm, decides what to do with those coins. However, the concept of oracles, that is an up-and-coming concept, is the concept of being able to bring information into the blockchain that wasn't there before. They couldn't be created there. Information such as who won the elections, what is the current exchange rate between US dollars and yen, whether this individual sold his house to that individual. External parts. And once this is reliably connected, this real offline world is connected onto the various decentralized apps that are running on blockchain technologies, then we will see a tremendous amount of new ideas and new applications and new possibilities that can run on the blockchain that we couldn't even imagine today.
Great. All right. Well, we'll take a couple questions of the audience while the mic is getting passed around there. I failed to introduce myself. Cam Turner. I'm an entrepreneur and investor. I'm right now working on a project called FounderBit. We're unannounced right now, but if you go to founderbit.com and put your email in, you'll be on our update list, and we'll send you information. And we have some exciting stuff to share soon. So with that, questions, and I'll just go ahead and repeat them from the audience for the in the jacket back here.
Look at the ones who are...
So sorry, just to repeat for the video, the question is, will VC be replaced by ICOs?
I would say the ones with the best LPs will not. The ones who are taking equity and token, look at Andreessen, look at the best funds that are participating are because their LPs are themselves. Because they're their own smart money, they don't need to ask permission from their LPs to do this. So I think a lot of them are going to get outflanked, the ones who can't get LPs to get on board. So will those guys probably lose? Yeah, probably if this is a substantial market. But I think VCs, the smart ones, are just going to, like I said, bind and do projects that do protocols. Like they're killing it. Like A16Z's, Bitcoin, or altcoin bets are fantastic. So the best ones will thrive.
Yeah, I think there's a serious risk when companies raise too much money to get too defocused and spend time on way too many things and not succeed at anything. And so I think there will be a lot of companies that overfund and don't do well, and they're overfunded because the environment, at least right now, is not thoroughly diligencing teams, especially team dynamics. And so what that means is in the long term, I don't believe venture capital is going to be replaced. I think that people who understand crypto and understand tokenization the smart investors or the smart LPs are going to take over, and with a subset of the market where tokens make a lot of sense, there will be token funds, but you still need that layer of vetting to happen, because if there isn't some level of vetting at the early stage when there's so much uncertainty, then you're just going to, a bunch of people are going to lose their money, and which is going to happen, right, at some point, and be upset, and it'll contract, and there'll be regular VCs. So I don't think as an industry it's going to be replaced. Maybe the personnel will shift around.
Okay, one more question up here in the front. Great. So the question is around risk and return, and Michael Feng made some good points in the last panel about this. What do you guys think in terms of how you evaluate volatility relative to return? Oh, sorry, equity versus token, right? In that context.
I can give my thought on this. It depends on what you believe that that company or the team, if it's not a company, what makes them great. So if their goal is to create a company and sell the company or go on a public market, then you want to bet more on buying equity from that company. But we see today that in some ICOs and some ideas, the company that is operating the idea is actually a non-profit organization, like such as, for example, even Ethereum itself is executed by a non-profit organization. And in that case, what you are basically betting that the token itself is going to be something that will, over time, give you more returns rather than owning a piece of that company. So, like, for example, in the non-profit organization, there's no ownership. There's nothing for you to own. That's what I would say, but what do you guys think?
I would say go with the ones that sell you both. Like, I mean, honestly, the best breeds are now, hey, sell equity with the token exposure. Fantastic. And the right equity investors know to move that to the next stage of financing. So I would highly recommend investing in highly vetted companies from Stanford StartX or such that have equity investors on board and are now taking token. All of us have Leland Stanford Jr. as our investor. So we're always going to look out for Stanford's return on the equity. So when we talk about our token, we care about our investors too. So we look to those standards. That's the bottom line. And I don't think all of us are nonprofits. We're mostly corporations, and we're here to make a profit. And we're also here to build protocols like Filecoin did. I think that's...
Yeah, I mean, there's obviously more liquidity in the token model. I don't know, yeah, it's highly dependent what the benefit of equity versus token is. I think it's dependent on if you think the token is going to be valued in the future, right? I mean, these are basic concepts. It's very difficult. I think the ethics of the entrepreneurs and how much they're going to be looking out for their investors is very important. And I think in this sort of environment with so much money, there can be a lot of weird incentives that come up with when a lot of money gets involved. So you have to make sure that, again, you have a vetted source or some trust with these entrepreneurs. 'Cause it's a funny thing. Everyone says, you know, blockchain, it'll increase trust. Well, at the end of the day, if the team is going to run away with it, or you know, not, or you know, do some sort of funky stuff, or they're not actually qualified, having all that money up front isn't a good thing. And so that's why I don't think venture capital is going to go away. I think there's going to be a layer of people who are vetting or making sure that people are trusted. And I mean, that's part of what we do at StartX is we actually try to quantify trust and reputation within our community so that we can all share information openly and help each other. And so, I don't know if that's an answer to your question, but I think it's highly dependent on the situation.
Let me give Michael the final word, who just joined us. I assume he was out hustling in the lobby. But his company, CoinAlpha, is centered on this concept of making that trade-off and how you think about diversification. So do you want to speak to that? Maybe since we heard from Cameron on the startup context, either traditional players who are doing, or traditional cryptocurrencies, or long-standing companies who are now issuing ICOs, so more mature companies where there's more of a track record.
Yeah, so one thing we're hearing is that a lot of like mainstream startups, like people who've raised a Series A or B, are also looking at tokens, as well as companies at the seed stage. I think the important thing to realize long term is that there are different trade-offs between issuing equity versus doing tokens. But in the future, there also may be some commingling there. I know a bunch of companies are looking at issuing equity tokens under regulations like A+ or CF, which allow those tokens to be held by retail. But they're still equity. So you kind of get the best of both worlds, where you have a clean model in terms of what you actually own, which is a portion of the company, but you also have the liquidity of a token, the ability to inject network effects into your early user base and incentivize them from a monetary perspective, and you have full compliance with SEC regulations. So I think in the future, right now we kind of have this like, should you invest in equity versus tokens debate, but in the future, that debate might be unnecessary.
All right, well, we're over our time, so please join me in thanking the panel.
All right, thank you very much. So we're moving into our next segment, company presentations. We'll begin with Adam Zhang, COO and co-founder of Oben.
Hi, my name's Adam. I'm a co-founder of Oben in Los Angeles. Oben is a leader of a personal artificial intelligence technology company. We develop artificial or digital copy, digital twin of every people, which looks like the people and talks in people's voice, and also think like the people. And last year, when we start to deploy the technology, we realize one potential issue, which is, for example, if I see a girl's AI, personal AI, we call it PI, P-A-I. If I see a girl's PI, how I can make sure that PI truly belongs to the owner, instead of it's a fake AI created by an old guy. So we deploy our personal AI on the blockchain. And Project Pi is the first AI public utility blockchain that we created to support and to support the creation and the usage of a PAI for everyone in the world. There are 7.6 billion people in the world, and we believe everyone sooner or later will have their own AI, and then there are lots of AI applications can be built on the top of a personal AI. Here comes my AI.
Hi, I am a virtual copy of Nikhil, made using Oben's artificial intelligence technology. As Nikhil's personal AI, I enable Nikhil to spend more time with his wife and 3 kids, enjoy a nice hike, or go off-roading. 你好，我是尼克尔，来自虚拟世界，我长得帅，能唱歌，能跳舞，还会说中文。
This is my co-founder Nikhil's personal AI. Can you move the first one? And click.
大家好，我是正义的人工智能，长得像，说话像， 是地道的北京人，在他忙的时候，我就是他的小号，我可以帮他做事情，给小朋友读书，给微信朋友留言，提醒他每天的日程，我还可以替他唱歌，而且唱得比他好听。
So this is my personal AI, and it can sing as well.
给你一张过去的CD，听听那是我们的爱情，有时会突然忘了，我还在爱着你。
Hi, I am a virtual. Hi, I am a virtual copy of Nikhil, made using. I'm also a pretty good singer. I have a better voice than the real Nikhil. Let me sing for you. Take me out to the ball game. Take me out to the crowd. Buy me some peanuts and cracker jacks. I don't care if I never get back. Let me root for the home team. If they don't win, it's a shame. For it's 1, 2, 3 strikes you out at the old ball game.
Thank you, thank you. So how to do it? Very simple. I upload my picture and my audio recording to my app in the blockchain. And then I call the AI function, and then I build my personal AI, use the AI function on the blockchain. And then it's only the beginning. Right now, we can have the AI to learn about the picture to recreate 3D avatar of the human. And then the AI can also build a speaking model for the human as well. So in this video, I didn't speak any word. And so all the audio and the singing voice and also the animation of the facial were created by the AI. And it's only the beginning. And we are going to provide more and more AI function to allow people to upload more data. Open, our company was invested by Tencent and SoftBank in May this year. We raised Series A, $14 million US. And because we are working on the blockchain as well, so right now we are going to do the crypto token sale as well. So our public utility AI blockchain enable several industry to work with us to develop their own project as well. For example, we already signed an agreement with a healthcare organization to create a digital copy of a physician and a patient. So we will going to explore to use the emotion support to help with the physician and the patient to make sure the medical advice is more effective. And also, we already set up a joint venture with the largest celebrity company in South Korea to create the digital twin of the celebrity of SM Entertainment. And those celebrities can use their digital copy to engage better with their fans on the blockchain as well. And we also working with one of our investors to create a blockchain, private blockchain for the artist. And so that in the museum or at home, the student or any people, they can learn about the motivation of the artist, why they create this art piece, and also lots of other data can be transparent on the blockchain as well. On the top of all those vertical industry blockchain, we can also build the app. And right now we are working with Tencent to create, to convert ebook into audiobook and enable by the voice of a celebrity on the blockchain as well. We ourselves are working on our own social app to allow any people to use their personal AI to find a date to get a more social relation. And of course, in the future, we are going to provide digital and AI shopping function as well in the future. So the beauty of AI on the blockchain is people control their own data. They can decide what kind of AI they want to train, what kind of AI skill they want to have, and also use the blockchain and smart contract function. We can decentralize the computing mining power to help lower the AI computation and to make AI more efficient and cheaper. And finally, the more people start using personal AI, the better technology the AI will become. And so by working together, we can make AI be more manageable. And I think in the future, the AI need a democratization such that every people will understand how to manage and control the AI. And together, human can get along with AI. We are also creating our Pi coin and to facilitate the ecosystem of a personal AI and also to allow the all vertical industry and also app developer to work with us to make sure every people in the world in the future will have their personal AI and also application on the top of personal AI. This is our internal testing app. You can upload your picture, create your 3D avatar, and then you can Photoshop your 3D avatar, and then you select one digital people in the app, and then you can have a casual meeting with him in the AR function using iPhone or Android phone. If you are interested in our token sale, you can come to our booth just by the reception, and we can talk more. Thank you very much.
Thank you. That was great. Thank you. All right, next up to the stage, Jonathan Chow, CEO of B-Token. Nope, just kidding. All right.
Hi, good morning. I was going to spend the day surfing, but then I realized that I should come talk to you guys. I'm Stephen Waterhouse, co-founder of Orchid Labs. Is there a clicker? How does this thing work? Okay. Oh yeah, here we go. Is there a timer? Do you guys have a timer? Okay. I'll time myself. Okay, good. So this is what we're doing. We are working on anti-surveillance, anti-censorship technology. My team is some really amazing people. Steve Bell ran Trilogy Labs investments in China for 9 years behind the Great Firewall. Invested in about 100 startups in China, including BDC China. I think some of you guys may know him. He had worked with Brian Fox and Jay Freeman for a good 20 years or so. Brian wrote Bash, which is a core component of Unix. Jay did Cydia, which is the jailbreak for the iPhone. Many of you may have used that back in the early days. And then Gustav Simonson is Ethereum core dev security. He did a lot of work on the fixing the DAO and then earlier parity bugs. We do not like censorship or surveillance. And I just spent a few days in Beijing and Shanghai, and it's really working well over there. The Great Firewall is really good at stopping you accessing the kind of sites that I like to go to, like Google and Facebook. Luckily, I had my Verizon phone with me and also my Google Fi phone with me, so I was able to get things going. I think I spent a lot of money on roaming costs, but it was worth it. But not everyone's that lucky, and I believe that China is about to make VPN access illegal as of end of February. Our protocol actually works there right now. I tested it when I was in Beijing, and that doesn't mean it's going to work forever, because the firewall is partly an AI, so it adapts. But we believe that thousands of people incentivized to develop basically protocols that can jump the firewall will mean that we'll be able to beat it eventually. So the way this works is there are contributors and consumers of bandwidth. And when I say bandwidth, I mean encrypted anonymous bandwidth. You could run this from your home computer without any specialized hardware. You just need a good connection. You could run it in a data center. Maybe you could run it from your phone in the future. Right now we have an alpha which works as a Chrome OS X plugin. In the future we'll be developing other clients for Linux, Windows, your phone, etc. The eventual plan is to integrate this protocol into applications like Google Apps, Facebook Apps, WhatsApp, and so on, most of which don't work inside China right now, or more importantly for me, doesn't work in the Middle East, doesn't work in Turkey, doesn't work in Russia. People get paid by routing traffic. You may be familiar with onion routing and schemes that have been around for a while, since the early 2000s. There are a series of relay nodes. Any one of you could be a relay node, any one of you could be an exit node. We also have a new concept called whitelists, and I don't mean whitelisting ICO investors. I mean whitelisting sites. So the community can develop lists of sites which it believes are good or bad. And if you're in Sweden, which doesn't really have any data privacy issues, you can route anything. So maybe there'll be different pricing for different kinds of sites or different kinds of whitelists, but this is a new concept we believe will be very interesting. We started in the beginning of this year, formed a team in the first part of 2017. We raised a seed round in July from a number of great investors, including Polychain, Sequoia, Andreessen, DFJ, and FPG, who I believe was here earlier, my friend Richard. And we announced what we were doing a couple of weeks ago. I've been traveling around the world for the last few weeks, a number of conferences, including Slush a couple of weeks ago in Finland. We are in the middle of a pre-sale, and we will be releasing the token, the network, the software, everything in March of next year, most likely March. You know, you never know with this kind of project, but that's certainly our goal. How many time? Pretty good. Does this thing work? Here we go. This is the final thing. This is our goal. So I think it's pretty clear what we're trying to do. We're very mission driven. It's the thing that gets me up in the morning, unless I want to go surfing. And we're very strong believers in this idea. This is my contact information. I'll leave this up for a while. If you want to get in touch with me, I'll be here until about 3 o'clock, and happy to chat. And I'm based in San Francisco. We travel a lot. Currently, I'm allowed to get into China, but you know, you never know later. But feel free to grab me later, and I'll be here for lunch, so let's catch up.